how do you turn a $100 portfolio into $10,000? Well, it's all math. The historical average stock market return is 10% a year. Now, that doesn't mean that the stock market's gonna go up by 10% every single year. That means something like, okay, one year the stock market might go up by 30%, and the next year it might go down by 5%, and on and on and on. But over the long run, the stock market has gone up by around 10% a year. At the same time, the majority of stock market investors lose their money even though the stock market goes up over the long run because they don't have the right education. Or maybe because they were trying to trade hot stocks, trying to get rich quick, or maybe because they were trying to trade on emotion, or maybe it's a factor of all of these. But you have the right education now, so let's start with the most conservative approach. Let's say you only have $100 to invest today, and then every month you add in another $100 into your portfolio, so that's $1,200 a year that you can invest. And you just take this money and you are putting it into a general stock market ETF like VOO or SPY, and now you're just trying to match the stock market. If you do this every month, you just throw $100 into your investment portfolio and you just put it in this one general stock market ETF, and you're just trying to match the market. You're getting a 10% return a year. Now, you will have a $10,000 portfolio in just 6 years. Now, you're not trying to pick the perfect stock or trying to find the next hot stock. You are just trying to match the market. The 3 factors that will determine how much money or wealth you make in the stock market are how much money you invest, how long you invest for, and what returns you get. The longer you invest for and the more money you invest and the better returns that you get on your investments, the more money you'll make. But what you might find interesting is that your returns don't grow in a linear line. They actually grow on a curve like this because the more money you put in and the longer you put your money in for and the longer and better your interest rates are, then the better your returns will get. And now you're not just growing your money, you're compounding your money, which means now your money is making you money and the money your money made is making you money. So you're adding speed on your side, which means the longer you do this, the faster your money will be making you money. Now, I get it. Investing your money can be scary, especially when we're in a recession like we are in right now, because you could invest your money and then see your stock market portfolio go down and nobody wants to open up their portfolio and see red. But what you have to remember is the real money isn't made over 2 months. The real money is made over the long term, and that's what you're going to be doing here. If anything, when prices crash, you should be buying even more aggressively because that means it's an opportunity for you to buy great investments at a discounted price. But now let's say you want to be a little bit more aggressive with your money and you want to be involved in the tech space because you really like tech and you think that's the future. Well, then you can invest your money into something like VGT like I talked about earlier. And over the last 10 years, VGT has gone up by about 18.5% a year. And over the last 5 years, it's gone up by around 20% a year. Now again, past performance doesn't predict future performance, and investing in one specific sector comes with more risk, but also the more potential to make more money. Now, if you do the same thing and you get the average 18.5% return a year, which isn't guaranteed, but if you do, then you will have a $10,000 portfolio in just 5 years. And that's just $100 a month. Imagine if you invested $200 a month, or $2,000 a month, or $5,000 a month. The key here is consistency, and picking stocks is fun, but it's not profitable for the majority of people. I mean, are you in this game to do what's fun or to make money? Like, if you want to pick stocks, that's fine, but then you need to actually put in the work and devote your time, effort, and resources to learn how to do it the right way. But this is where financial education is so important because it allows you to compete with the big time investors on Wall Street without having millions and millions of dollars to invest, because you can just put your money into the right funds and let the funds do the work for you. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.